Hello traders, Gary Wagner here just after 10:30 in Honolulu, 4:30 in New York on Tuesday, election day here in the United States, November the 4th, 2014, and this is the daily report for gold and silver. Mixed bag across the board, gold trading higher, silver, platinum, palladium trading lower. Dow Jones Industrials higher, Standard & Poor's 500 lower. So a mixed bag today. First to gold, 1168.70, puts it up roughly about $3.50 on the day. Now, in terms of the high and low, we've had a low of 1163.70 and a high of 1172.80, a pretty narrow range on the day. Silver, definitely trading lower on the day, just hovering right above $16 per ounce. The low has been $15.86, high $16.13. More on silver in a little bit. You know, traders, no doubt we have a very interesting day, quiet day actually, with it being election day here in the United States. With gold trading up a little bit, silver trading down a little bit, also with the S&Ps off a little bit, but the Dow Jones up a little bit. We do have that mixed bag. We've got the S&P 500s currently trading at 2007, the record high at around 2010 or 2010. So we're just off that. The question is, and we talked about this yesterday, if there's a place to find a little bounce. And when I talk about a little bounce, I'm not necessarily saying that we'll see a key reversal in the market, although at any point we could, and it would certainly take many traders by surprise. But we are at a level, and we'll look at a couple of charts that really illustrate that if we are going to see some kind of a bounce, this is the place that we could see it. Half-day candles that we're looking at, we have had some consolidating candles like this doji here, this being really a inverted hammer. At the top of the market, this would be called a shooting star. Of course, hammer, hangman, shooting star, inverted hammer. Those are the four of the umbrella group, this being a great example right here of a hammer. But the question is whether or not we'll find a little bounce and how far that bounce might take us. Really, my sense is that we want to be on the lookout for that, but we haven't really seen any evidence of that just of yet. But we are getting some of the things that we are looking for that would be indicative of a market turning, and one of them is the dollar. So traders, here we have the daily chart of the US dollar. It's almost call it an engulfing bearish, closes just around the close of the prior candle. It's definitely trading below the open of this green candle here on the daily chart. Now, we also have a small gap. Now, it's not a true gap. Reason I say it's not a true gap is we have lows and highs. We have wicks, as you can see, the wick here and the wick here that actually go into that. So it's not a true gap. However, it is a price void in terms of bodies when we look at it through candlesticks. And so it does appear as though we filled that gap with this particular low coming in here. Again, what we'll see and whether or not we'll see support come in right around here, which is that previous top at about what, 86.80, somewhere around there, trading at 87.10 right now. We'll have to see. But remember, we are looking at other markets to give us some kind of a clue or indication as to when this current downtrend will subside, when it will conclude, and when we'll see this market begin to move back up. Of course, we're short at 1208, so we want to protect any kind of profits. And if we do see this market begin to take off, we certainly want to exit that trade and pull profits on that trade. And traders, as I said before, we're looking at a weekly chart. And this, as I said before, if we're going to find an area where it could find support, this would definitely be the area we'd want to look at because of the fact that we've seen such a consistent bottom formation each and every time out of the last 3 times that it's hit this area. Now, we do have a difference here, and we talked about this a little bit last week, and the difference that we have seen is when we look at these lows right here at the end of 2013, beginning of 2014, and when we look at this particular low here, call it mid 2013, each time these lows were achieved, if you look at the candles, by a tail. So it didn't open or close in that area, but did have a low in that area. Now, the key distinction is this particular sell-off here, we had the market trade all the way down to this particular area. So the low is also within the body, and that's why I see a real potential difference and a real potential for a break below this point. Now, we've talked about where we think this market could go if in fact it breaks, but let's focus on where it could go to if in fact we see more evidence of a break, because right now I see a market that could break, but also that could find support. So we're kind of in a holding pattern or a waiting pattern to see what this market wants to do. Now, there's really no doubt in my mind what this market wants to do. After not being able to find any kind of support in silver at just above 17, you can see this band. We're looking at a daily chart, but you can see this band, this area here in which it was attempting to find some kind of support right at around 17. We had a clear break. That break took us right to 16. That's exactly what we anticipated. And now the question is whether or not we'll find support here at 16. I believe that we have gold and silver in tandem. If we see a continued break in gold, we'll see a continued break in silver. If we see gold find support and move back up off of the recent lows that we're looking at around 1168, we would see, I think, silver recoup. So I think that the two are interrelated, but we want to watch gold for movements in silver. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update review. Bye-bye.